Okay, let's shift focus to personal finance. Hemant Rustagi of Wiseinvest Advisors joins us as the guest. Hemant, what we are tackling today is the number of mutual fund schemes a person should have. How much of diversification is too much diversification? With respect to the number of fund houses, should one have, in the interest of diversification, half a dozen fund houses, 1 dozen fund houses? And in terms of schemes, what is an ideal number? What is the optimum in both these categories, fund houses and schemes?
Well, I think diversification is the key to investment success, because it helps in reducing the risk in the portfolio and also ensures that the portfolio performs during different time periods. But unfortunately, this is also one area, of portfolio building where most of the investors make mistakes. It's quite common to see investors investing in every fund that comes their way. For some, the attraction is lower NAV. For some, the attraction is, dividend declaration, and some get attracted to short-term past performance. But I think it's important for investors to realize that having too many funds in the portfolio does not necessarily mean that the portfolio is diversified, because in fact over-diversified portfolio suffers in more than one way. One is the portfolio becomes quite unwieldy, and it is always difficult to monitor an unwieldy portfolio. And second is the non-performing funds in the portfolio often pull down the overall performance of the overall portfolio. So I think it's very important to have the adequate diversification in the portfolio. Unfortunately, there is no optimal number that can be described which can ascertain that the portfolio is properly diversified. In fact, there are a couple of factors that every investor needs to look at. One is the size of the overall portfolio. The second is the asset allocation, also the kind of funds which are there in the portfolio. Now, for example, if you look at a debt portfolio of an investor, if he has one ultra short-term fund, a short-term fund, and an income fund, and a few FMPs with varying maturities, this will not amount to over-diversification. And the reason for that is because each of these products are suitable for a certain time horizon. But yes, if he has 4 or 5 income funds in the portfolio, that will definitely amount to over-diversification. Similarly, on the equity side, it's very important for investors to have exposure to a multi-cap fund, a large cap fund, a mid-cap fund, and a fund which is predominantly investing in large cap fund. And in fact, it also makes sense that within a large cap segment, if one has a very totally diversified portfolio and one which has a concentrated portfolio, that makes sense. But having 4 or 5 or 6 large cap funds or mid cap funds definitely means that there will be over diversification. So I think the important point from investor is to look at the portfolio of the fund they're investing in. That will decide the right kind of diversification, not their own portfolio. Like I said, there is no optimal number. It clearly depends on if you are just beginning to invest through SIP. I have seen portfolios where for 5,000 investors will invest in 5 funds. I think you need to begin with maybe max 2 or 3 funds. But as you become a more experienced investor, as you have a portfolio which is growing in size, that is when I think the different kind of funds can be added. So like I said, there is no optimal number, but clearly depends on certain factors as to what kind of diversification should be there in the portfolio.
No, I'll still persist. Can I keep 10 equity funds and 10 debt funds? No, I mean, this is a genuine question which people will have for you. What do you do when I'm sure you have clients.
Look, as I mentioned to you, in the debt fund you can have, in debt portfolio you can have 10 funds, like I said. If you are investing in fixed maturity plans of different maturities of 3 months, 6 months, or 1 year or 2 years, that will not be over diversification because you don't have to monitor them. Similarly, if you invest in an ultra short-term fund, it's only for parking of money for certain times. But if you talk about equity fund, like I mentioned, you must have exposure to different segments of the market. But if you have 10 large cap funds and 5 mid cap funds, that is definitely going to be over diversification. And that, as I mentioned, it will make, what will happen is you'll have a lot of, non-performing funds coming into the portfolio, and they'll pull down the overall performance.
Yeah, I'm sure that's a problem that many people have. I mean, you just keep investing over the years in SIP after SIP, and then one fine day you realize that you have almost 10 equity funds.
I think you have 2 anchors with a lot of personal angst on the matter. Let's take a break. We'll come back with viewer questions. We are back with our personal finance segment, and remember what we were discussing with Hemant Rustagi on whether there is an ideal number of mutual funds that you should diversify your savings into. We have an SMS query on that issue. This SMS comes to us from Vijay Shri Singh from Jodhpur. Vijay Shri says she's 42 years old, has been investing in mutual funds for the past 2 years through monthly systematic investment plans, SIPs, totaling 40,000 rupees a month in 7 mutual fund schemes across fund houses. She wants to know how she can correct the over-diversification, if it is indeed over-diversification.
Well, I would say here, the amount that is being invested is around 40,000 per month through SIP, and there are 7 funds in the portfolio. I believe that there is a need and definitely a scope to reduce the number of funds. As I mentioned earlier in the show, I think one can have, ideally one multi-cap fund, one large-cap fund, one mid-cap fund, and another fund which invests predominantly in large-cap and some portion in mid-cap. Because the key factor is to maintain the balance between different segments of the market, because they behave differently over different time periods. So in this case, I would say that she can have maybe 3 or 4 funds at the most. Some of the funds which are there in the portfolio can be retained, like there is HDFC Top 200, there is Canada Wipro Diversified Fund, and there are also Reliance Regular Saving Equity Fund. These 3, because they belong to different categories of fund, can be retained. And I would like her to include one quality mid-cap fund, which could be IDFC Premier Equity. Now, if she invests 10,000 rupees in these 4 funds, what will happen is her allocation to different segments of the market will be like 60 to 65% in large cap and 30 to 35%, 35 to 40% maybe in mid cap. I think that is the ideal combination that an investor should have, especially the one who is looking to build up a corpus over a longer period of time. One more thing I would like to add here, that if this is a common portfolio for different goals, I think she'll be better off if she segregates portfolio depending on the goal, because each of our goal has a different time horizon and the portfolio mix maybe have to be different. So I think these are 2 things I would like her to do in the portfolio.
All right. Hemant, thanks a lot for joining us with your advice on our viewers' questions. Take a break on that note.